From the morning reading, yesterday's euphoric gains evaporate. Stocks sell off sharply, led by the energy sector. Oil falls below $35 a barrel, lowest since February 2009. Only one sector moved higher on Thursday. XLU, XLV, and XLP were the strongest sectors, while XLE was the weakest sector. Breadth weakened as decliners led advances 1.88 to 1 on the New York Stock Exchange and 1.68 to 1 on the Nasdaq. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I'll provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:02 a.m. Central Time, and I'm recording this in preparation for the market day of December the 18th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive into the morning report. We had a little bit of weakness in the overnight action, and indeed, at the time of this cut, the S&P futures were down 5.25 points, or about 0.25%. Russell was essentially scratch. Nasdaq just below scratch. The Dow was down about 0.33%. Crude oil, big mover in the overnight, down about 1.2%. Euro up about 0.25%. Bonds up about 0.33%, and gold up about 0.5%. Overseas action was also weak. China essentially scratched to the negative side. Hong Kong down about 0.5%. Japan down about 1.9%. Germany down about 0.33%, as was the United Kingdom. In terms of macroeconomic reports for today in the United States, you just have a flash services PMI, which is just a yellow flag report, and then FOMC member Lacker speaking later today, so be aware of that. In terms of current volatility conditions, short-term VIX, obviously yesterday was a very big down day, pretty much wiped out all the prior day's action. Short-term VIX almost a 19. Skew remains elevated, but not as high as we've seen in recent days at a 131.2. IV percentile for the S&P is at a 28. For the Russell 24, Nasdaq 24, and Dow 29. We did have a standard deviation move put in yesterday on 3 of the 4 markets, and then a 2 standard deviation move put in on the S&P. If you look at the last 2 trading weeks on the S&P, you've got 2 1 standard deviation moves, but 3 2 standard deviation moves. And recall, we've been talking about this skew being very, very elevated. Well, that certainly has followed through with the implied probabilities of that study, and having a 2 standard deviation move or greater within 30 days. Not only has that happened, but we've had 3 2 standard deviation moves within even just the last 2 weeks. So you pay attention to those numbers, and just remember that it does not mean that the next day is going to be a big down day, but certainly the conditions are ripe for a significant down move, and we've had that in recent action. In terms of the current charts, you see the SPX, and we'll zoom in on current action here. We had come back, as we said, into the middle of the prior range. We expected some weakness yesterday. The studies looking at prior up moves coming into the Fed action had shown that there was a pretty good chance that we would have some weakness in the day or 2 following. Well, we didn't have just some weakness, we had a lot of weakness, and indeed it wiped out everything from the day before. Classic dark cloud cover, also bearish engulfing. You could really call it either one of those candlestick patterns. Both of them are reversal patterns. The engulfing certainly is a very strong pattern on top of a very large prior day body. So this is pretty ominous. We'll have to see just where this follows through. Today is quadruple witching. We have multiple expirations coming together, so something also to keep in mind, and expect that we'll have a certain amount of volatility today as people are not just doing window dressing, but correcting positions, going into option expiration. They have to make decisions now. Some will be rolling, some will be covering, There'll be a lot of volume chopping back and forth likely today, so intraday action will probably be very difficult for day traders, so just keep that in mind. In terms of the Nasdaq, also very ugly yesterday and a complete reversal of the prior day's action. And then the Dow, again, much like the S&P, complete reversal, enveloping the prior day action. And then the Russell, which has been the weakest going in, was actually perhaps a little stronger in a relative sense than the other indices. And this may be simply because it gained less, had less to give back. So not a very encouraging sign by any of the broad market indices. Current volatility conditions, you see we had the huge spike, went up almost to 25, and then just got crushed going into the Fed announcement. That has reversed, and so far today is also up. We are in today's action running almost a 20 on the VIX futures. And let's take a quick look at bonds. Bonds were up very large yesterday, and so far today would seem to be continuing that pattern. So we'll see if we get up here to the prior swing high around 157 and 17/30 seconds. Okay, that's enough for the charts for today. Let's go to the daily report. We continue with phase 2. We still are expecting this to be a trend reversal. We are not expecting this bearish action to totally break down and take out the prior swing low until proven otherwise. But I have to also say that yesterday's action was weaker than had been hoped for, so got to take that into mind. We still have significant number of warning signs in the system. IPD status, though, at confirmed uptrend. Remember, that's just the second day. And then accumulation distribution score for the S&P is at a D+, the Nasdaq a C. GMI index remains a 2 out of 6 with a sell signal since 12/10. That author remains in largely cash. The stock charts decision points, so you notice there was one change yesterday. Nasdaq has gone to neutral on the trend model signal, and the PMO signal is outright bearish. So very, very bad conditions in terms of the short term. Intermediate term continues to hold up, and long term continues to be mixed. So quite a mix of stack here in our time frames, and that is not good if you're looking for a healthy bull market. Intermediate term market posture is currently barely bullish with a flat sentiment line, so pretty neutral setting there. This is second day intermediate term bullish, and you notice here that only one of the broad market indices is bullish, the S&P, which is the most important one, but all three of the others are bearish, and the Russell is at severely bearish. In terms of position sizing opinions, same as yesterday, with the portfolio exposure at 100% based on the mechanical signals, and then the volatility-based signals also giving us a signal at 100%. But I would give you some cautionary statements along with that. This signal, which is the 11th confirmed uptrend for 2015, we continue to speak about how poor the follow-through for the bulls have been this year. We've had a lot of signals, and a lot of signals that have led to nothing for the bulls. So you need to take a very, very cautious stance as you rebuild positions from the recent market downtrend. In terms of specific signals, you see volatility. Got a number of warning signs here. Market and decline has fired. Sharp increase has fired. VIX futures up over an 18 has fired. We have this elevated skew, which continues to produce 2 standard deviation moves. We have the intermarket risk aversion indicators with 3 of the 5 off. 2 have right at crossed, and so we went ahead and flipped this to risk on, and they're both, you notice, related to the shorter term bonds. So obviously with the Fed announcement, there's been some movement going on in the bonds. Fear and greed index, you notice, is a 31. So this is much more tilted towards extreme fear than what we had in the last 3 days as it had been improving. In terms of special opinions, a lot of caution probably is the order of the day. The VIX is technically inside the acceptable window to initiate new positions for novice traders. More aggressive traders will certainly find that the elevated premiums are a good thing for them, but bottom line, you've got to expect increased delta and vega moves. In terms of covered call strategies, as well as put selling strategies, cautiously acceptable to initiate new positions for novice traders, but be very defensive until you actually see a breakout of this range. Aggressive traders might consider using a 1-to-1 ratio of out of the money and in the money strikes, also the 1-to-1 ratio of high beta and low beta positions. Consider legging into the positions by selling puts out of the money and then scaling into the position and then converting it through the wheel into the covered call. Always keep the position size in the scale that you're willing to own if you're going to try to scale in, as this market is certainly not rewarding bulls and is periodically really putting it to them and putting pressure on. You have to be ready to take ownership of those stocks. In terms of sector-specific market posture, you can see with the exception of consumer staples, healthcare, and utilities, it's pretty much a sea of red in the short to intermediate term, bleeding into the long term. In terms of sector percent change, only utilities held up with a positive yesterday. That is a very defensive posture. Utilities were up 0.1%, but given that all the other sectors were down over 1% and energy was down 2.5%, that is a good position to own at the moment, it would seem. That should be enough for today. As always, if you find that what you're getting from here is helpful to your trading, we would ask that you recognize that by liking us on YouTube, subscribe to us on the YouTube channel. If you do that, that gives you notice when we post new content. Also, retweet us to your Twitter followers and your StockTwit followers. All those are taken as acknowledgement that what you're getting here is helpful and and you want us to continue to provide this free commentary each morning with the market comments. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers, and then you see the hyperlink as well that goes to the full list of disclaimers. And that should take care of us for today. We'll see you back here on Monday morning before the market opens with the Falcon Global Market Preview. Good trading.